So, hi everyone, welcome to the orientation session of Diploma in IFRS. And we are starting with the December 2023 orientation. So, we'll first talk about what this diploma is about, who all can do this diploma, and what is the benefit of it, right? And then we'll talk about what is the syllabus, what are the tips and tricks, how can we pass it? Like we have 6 months approx, right? We have a lot of time in front of us, but that doesn't mean that we can waste it or we can procrastinate. We have to start well in time because most of the people who are pursuing this diploma are working people. So anyway, you guys will have less of the times available with you, maybe with job, maybe with studies. If you are an ACCA student, you have passed ACCA, you are pursuing something else. So this is going to take less of your time, but in the sense that daily you might be giving less time, but yes, it will be spread across 6 months period. Now, 6 months period has one disadvantage also. So, for example, if we study something today, it's not necessary that we are going to keep it in mind for the next 6 months. We might forget it. So that's why in my batch, in my classes, I'm gonna immensely specify and influence you to make short notes. Okay. In the beginning, in the first day, also, I'm telling you this thing that we have to make short notes and do accumulated revision. If you guys have done your 11th and 12th, what was that? We were having exams after 1 year, right? So things were very difficult. Like you have to retain things over a course of 12 months. That is not the case with ACCA. I don't know about CA. Like you guys must be giving your exams, maybe with a gap of 1 year or so. So you might be used to it. But in ACCA, we have just 3 months. So we study something, we keep it in our mind for 3 months, and then we forget it. So that's not true with diploma in IFRS. So we have to retain things for 6 months, and that would only be possible, that is only possible if we make notes and we do repeated revisions. Okay. So let's just check it out. What exactly is this diploma all about? Like, why should I pursue this, and who all can pursue this, right? That's the favorite question of everyone out there. So first of all, the learning outcomes of this diploma are that by the end of this certification, you are able to understand, explain, and apply IASB's conceptual framework for financial reporting. Now, what is this IASB's conceptual framework for financial reporting? Most of you are working CAs, so you know what financial reporting exactly is, where we are actually making our balance sheet, the financial statements, the P&L, the OCI, the statement of cash flow, notes to accounts. So basically your annual report, right? So every company which is listed is making it its annual report. In the recent times, we've also got a concept of integrated reporting, where we just not report that, okay, what are the numbers of the company, what is the profit of the company, what are the assets and liabilities. Now, that is old school. Now we report things like what all social capital we have, human capital we have, environmental capital we have, how well we are to the environment, to the society, manufactured capital, intellectual capital, 6 types of capital basically. So you are not just limited to numbers now, you have many other things in front of you. So that is why we have to be very good in financial reporting, especially if we are a listed company. Now, if you talk about a company which is not listed, for them, it's like, okay, even if we make some, what do we call in Hindi? It's like a kaam chalao balance sheet and something. That also works. But for listed companies, it has to be in any situation a very good annual report. So we are going to aim for MNCs, international companies. We are chartered accountants. We are ACCAs. We will become qualified in diploma in IFRS. So we are experts of IFRSs, right? So we have to apply the conceptual framework of financial reporting. So what is, financial reporting now, that when we report the numbers and many other things related to the business, that is financial reporting. Now, what is this conceptual framework that I'm talking about? So conceptual framework, guys, is basically the basis on which IFRSs were made. We have a big conceptual framework. There are qualities of financial statements, what all things must be there in a financial statement. Then what are the presentational and disclosure requirements in IFRSs? Then what basically we mean by the elements of financial statements? What is the definition of an asset, liability, income, expense? All these things are covered in conceptual framework. So if you ask me that conceptual framework is it the bedrock of IFRS? Yes, it is. But the irony is that even though it's the bedrock, it's the Bible of IFRSs. But still, if there is ever a conflict between IFRS and conceptual framework, IFRSs always win. So when we'll be doing the studies of IFRSs, I will tell you where conceptual framework is in conflict with the standard, accounting standard. So even though conceptual framework is the bedrock of IFRSs, still IFRSs might override the conceptual framework. So as a diploma candidate, we are going to know the basis of IFRSs, the rules of IFRSs, the areas of conflict between these two, how to resolve, what are the current issues, everything is there in this diploma. So basically, you are going to become an expert of IFRS. Like we have experts of taxation, audit, we have doctors, specialists of medical science. So you're going to be an expert of IFRS. Then by the end, you will be able to apply the standards, the IFRSs. You will be able to apply the disclosure requirements. What is disclosure? I have to disclose these things in my financial statements. So what are the requirements for it? I cannot disclose anything and everything. I have to be specific. I have to strike a balance that I report everything important, but also I don't report immaterial information. So I have to report relevant information, right? So prepare group financial statements, excluding group cash flow statements, including subsidiaries, associates, and joint arrangements. So anyone here does know about group financial statements? You can unmute yourself and tell me. What do you know about group financial statements? Have you done this before? Yes. Have we done this before?
Yes, ma'am. We have done it. It's basically the consolidated financial statements where we
Yeah.
full consolidation method, and for associates and JV, we follow the equity method of accounting.
Very good. So he's already trained in it. So basically, group financial statements is like, for example, if we have a parent and a subsidiary. So we can take an example of Facebook, right? Facebook, WhatsApp, Instagram. These are part of one group. Meta bought them all. Now the new name is Meta, right? So they are part of one group. But legally, they are separate. If I want to enter into a contract with Facebook, I'll have a separate contract. I want to enter into a contract with WhatsApp, that's a separate contract. But economically, all of them are same. Now, that is what we mean by substance over form. Why do we create group financial statements? What is the logic behind creating group financial statements? Substance over form. What basically substance over form is? Legal substance, economic substance over legal form. That means legally everyone is single, everyone is separate, but economically, if I put to them together, they are same. So they're part of one family, right? So by the end of this diploma, you will just not know financial reporting for individual companies, one company, but a group also. How to consolidate a parent and a subsidiary, and not just parent and subsidiary, even the associates. Let's be realistic. It's not every time that someone will purchase our company. We might have just 25% share in someone, or somebody might have 25% share in our company. That is also very important, right? They are our associates. They have significant influence. Joint ventures, joint operations. How do we account for them? So all of this is going to be covered in our diploma in IFRS. So all in all, our exam is based upon the standards, the conceptual framework, and the consolidation part. We also have standards on consolidation. But why did I say standard separately? Because for individual financial statements, I teach the standard separately. And towards the end, we do the consolidated financial statements as well. So the way they are going to ask the question, we'll take a past paper for it and see how things go around. Now, let me just take some, very important yet basic doubts. Who all in the world are eligible for this diploma in IFRS? So if you are a member of a professional body which comes under IFAC, so if you're a CA, right? Most of you here are already chartered accountants. So you are eligible for this diploma in IFRS. So go for it. If you do not meet the conditions above, let's suppose some of your friends are CA inter, CA finalists, not yet members, maybe waiting for their articleship, they might still be eligible if any of these are met. What are these? 2 years of relevant accounting experience and a relevant degree. Honestly, if you're an Indian, relevant degree will be BCom, which is going to attract 4 exemptions from ACCA. So when we start ACCA post BCom, we get 4 exemptions out of 13 exams, right? So this is what they're talking about. Then 2 years relevant accounting experience and an ACCA certificate in IFRS. So if you have not done your BCom and you don't have 2 years of relevant experience, or you have 2 years of relevant experience but no BCom, then you might pursue ACCA certificate in IFRS. So it's a smaller version of diploma in IFRS. Like in ACCA, we have one subject SBR, another subject is FR. So FR is a smaller version of SBR. You might be having it in CA also, the final accounts and the smaller version of the accounting paper. I don't know what you call it, but basically in ACCA we have FR and SBR. So that's what certificate in IFRS is, smaller version of diploma in IFRS. Then 3 years of relevant accounting experience. Now I don't have a BCom, I don't have an ACCA certificate in IFRS, but I have 3 years of work-ex in accounts. So that also qualifies that we can do diploma in IFRS. Some people from science background also work in big fours and they might be into this accounting job, right? So that's also relevant to them if they have 3 years of work-ex. Then if you are an ACCA affiliate, then of course you can pursue diploma in IFRS, right? So that is the eligibility criteria. Now guys, let's check out the syllabus for diploma in IFRS, very much relevant to all of us. I will share my screen. Let me know once you can see the table. Okay. Yeah. Is the syllabus visible to all of you? Is it visible? The screen?
Yes, Saraswati.
It is?
We could not see the entire syllabus. Just we can see the screen as syllabus. That's it.
Oh, okay. Now?
Yeah, now it's visible.
Oh,
Yeah, now it is visible.
yeah. Okay. Now let's see what basically do we have in our syllabus. I don't know, you guys tell me if you've done this in your Indian Accounting Standard or not. IS 1. So basically we have 33 IFRSs in our syllabus. Okay. IFRS is language of accounting. You guys are experienced. I need not explain you what IFRS is. This is not FR class. So you have accounting experience or you are a member of CA or ACCA. That's why you are here. So I'm assuming you guys know what is IFRS, right? Okay. So now 33 standards. Is that tough to do? Too much of syllabus? Very big syllabus? No. I am a tutor for ACCA. The same syllabus, you know, we have FR and we have SBR, as I told you before. I would place diploma in IFRS here. It's higher than FR, but not higher than SBR. SBR, we have syllabus is kind of same, like a little more than this, but the way they ask the question in SBR is very different because one body is taking both these exams, ACCA, right? So that's why we should be knowing what is there in SBR also. You guys should be aware how ACCA asks question. If you have done CA before, that is different. ACCA always hits your concept and they are going to ask you things in case study format. Okay, now that means the difficulty level is lesser than SBR. That is sorted for all of us. That means we can do it. If students who are just, you know, graduates, you guys are CS, if they're just graduates and they have done SBR in 2.5 months, 3 months, you have 6 months with you. So you can easily do diploma in IFRS. Okay, so the syllabus is not lengthy at all. I've heard many people say that it's a lengthy syllabus. That is not true. So check out the syllabus with me. The first standard we have is IS1 presentation. So I have to prepare financial statements because I need to report my numbers to the stakeholders. Stakeholders are the people who have interest in the business. They are interested, what are your assets, liabilities, incomes and expenses. For them, I do financial reporting, right? So how do I present these financial statements? What type of financial statements do we have is given in IS1. Then IS2, inventory. So we keep our stock with us, closing stock. So how do you value that closing stock? That's what the standard will tell, right? So that is basically, yeah, I'll share this syllabus in the group, don't worry. So that is basically your how to keep the inventory. We have valuation techniques. That is, one is AVCO, average cost method. Another is first in, first out. Previously, we had LIFO, that is last in, last out, or last in, first out. That is now no more there. Okay. So we have FIFO method and the AVCO method. Then IS8, accounting policies, changes in accounting estimates and errors. A very short yet important standard. That what if I change a policy? What is a policy in accounts? You made a choice. You were given a choice, either you go to a vacation to Dubai or you go to Singapore. You made a choice, I'll go to Singapore. Later on, you had a mood swing and now you said, I want to go to Dubai. Now that's your mistake, no? Tickets for Singapore were booked. So that's something which is your choice and you changed your choice, which is why you're going to bear the loss more. So policy is a choice. So if I change my choices in the standard, how do I account for it? That is given to you in IS8. If I change my estimate, what is estimate? Depreciation, life of an asset. That is something we don't know. Everyone will estimate it. I mean, if you want to say that I use my car and every day my car is going 10 kilometers or 20 kilometers, this is the depreciation, monthly depreciation. That's an estimate. Nobody can challenge that. And nobody can call you out for that. So if you change your estimate, you have lenient rules because that's not your choice, right? That's not something that is in our control. Error, if you do make mistakes in previous years, if you have made mistakes, again, that is going to have strict outcomes. So policies, if you change, strict outcome. Errors, strict outcome. Accounting estimate, lenient, because that's not in our control. Then you have IS10, events after reporting period. What is basically events after reporting period? Let's check that out. Our year ended on 31st March. Usually that's happening in India, right? 31st March is a financial year end. Now that doesn't mean that your financial statements will be prepared on this day only. I mean, if you guys are working, you guys take how many months? How many months do you take to prepare the financial statements? Are you still preparing the financial statements for the year ended? 31st March 2023. How many years, or sorry, how many months do you take? 1.5 to 2 months, right? So Suraj says roughly 1.5 to 2 months. If you ask me in UK, we still have around 9 months. Year ended, we still have 9 months, and then we actually publish our financial statements. So you make it within 2 months, that's your good job. But actual publish requirements are like not just after 2 months or 3 months, it might be after 9 months, like in UK, right? So that means I have a lot of time between the date year ended and the date the accounts will be published. Now, if something happens between these two dates, right now the report is just with me. I prepared it, it's with me, financial statement is with me, and something happens to my event. There is some event which affects the financial statement. So now you will decide whether that event is adjusting event or whether that event is non-adjusting event. So that is given to you in IS 10, events after reporting period. Something which happens after the reporting date, before the date the accounts are published. So that is event after reporting period, right? So that is what we are going to do in IS 10. Now let's get back to our syllabus. So IS1, simple financial statements presentation given to us in IS1, IS2, inventory. Then we have IS8, changes in accounting policy, estimate and errors. IS10, events after reporting period. Then you have an accounting standard on income taxes. Have you guys done deferred tax in your Indian accounting standard? Yes or no? Have you guys done deferred taxation? Yes, okay. So basically in income taxes, I will also learn with you the Indian accounting standards. So in income taxes, we have two types of taxes. One is current tax and in another is deferred taxation, right? So we are going to do both of these. Then IS 16. I know we have in IS 16, that is property, plant and equipment. Here basically we talk about a tangible non-current assets. Non-current assets, anything we hold for more than 12 months. Tangible, something I can touch, see, transfer. So how do we account for our PPE? What is the initial measurement? What is the subsequent measurement? What is the difference between various models available? Cost model, revaluation model. Everything will be tested through case studies. So rules, I think everyone knows. By the end of the classes, when you'll complete live sessions with me, you'll be very good in the rules. The thing is about application. So the moment we do a concept, we'll together with it solve a case study on it, right? So that will make your concept stronger and your application skills also very strong. Then IS 19, we have employee benefits. Have you guys done this standard in CA? Is it there? This is basically on pension schemes. Yes. Okay. So what is employee benefit? Basically, you have retirement benefits given to our employees. So how do we account for it, right? If there is a defined benefit scheme, defined contribution scheme, so how do we account for our retirement benefits? That is employee benefit. Then IS 20, accounting for government grants and disclosure of government grants. Simple, if government helps me, that can be help because of a revenue grant or it can be because of a capital grant. Either government wants me to meet certain expenditure, that's why they are helping me financially, or they want me to buy some asset, that's why they're helping me. So revenue grant or capital grant. Then rules attached to it. That is IS 20. IS 21, the effects of change in foreign exchange rates. Very important standard, not just from the perspective of individual company, but also from the perspective of group accounts. So what if I am in India and I have an asset in UAE? How I'm going to account for it? My financial statements are prepared in Indian rupees, but my asset is in dirhams. So how I'm going to convert it into Indian rupees? What are the rules for it? Now that is very important for IFRSs because IFRSs are international, no? So all the companies post diploma in IFRS, wherever you will work, they will be MNCs, and they will have lots of assets which are outside their domestic country, right? The headquarters. And the financial statements are prepared according to the headquarters. So that means I'll have to look for it that, okay, what is the exchange rate to be used to convert. We don't just have conversion, we also have something known as translation, retranslation. So in group accounts, what if my subsidiary is in foreign country? How do I account for them? How do I convert all the assets and liabilities of that subsidiary into my own currency? That is given in IS 21. Then you have IS 23, borrowing cost. Very important standard. Borrowing cost is capitalized. What is borrowing cost basically? If you have taken loan for any construction, if you have taken loan for any qualifying asset, I want to construct a building, I need a finance, and I'm going to pay interest on that, right? So that is basically borrowing cost. So it is capitalized. So the date of construction, the line of date of construction, and the line of period of capitalization are two parallel lines. The day construction stops, capitalization stops. What is capitalization? What is all this date of construction and everything you're going to do in IS 23. Then IS 24, related party disclosures, related party transactions. So guys, everything which we do with our related party. Now, what can be the related party? Your key management personnel, your directors, okay? You talk about the CEO. You talk about the associates, the joint ventures, our subsidiaries. Subsidiary is subsidiary, right? Joint venture of our associate, joint venture of our subsidiary. All these things are related to the company. So someone who's related to you, let's suppose your friend, let's suppose your sister, you enter into a transaction with her. So most probably it won't be at arm's length. What is arm's length? That we are maintaining a safe distance. That means I am not doing favors or I am not seeking favors. I am doing it as a market participant, as a third party. So in related party transactions, mostly it is not at arm's length. So that's why we have to disclose. Even if it is $1 transaction, it needs to be disclosed under IS 24. Then you have IS 27, separate financial statements. This is a very small standard. Basically, here we talk about when in case of parent and subsidiary, we also need to prepare separate financial statements. Parent will have its individual financial statements also and consolidated also. Same with subsidiary, right? Then IS 28, investment in associate and joint venture. As Suraj correctly just stated few minutes ago, that for associates we do equity method of accounting, right? So this is what it is all about, joint ventures and associates. Then very important standard, IS 32, financial instruments, and we also have IFRS 9 on financial instruments. What is your standard number in Indian accounts for this financial instruments? Is it 9 and 32 or is it different? India has 32 and 109. Okay, so kind of same. So I really believe that Ind AS and IFRSs are like 95% similar. Okay, so financial instruments, a very vast accounting standard. For ACCA students, they face utmost difficulty in this only. We have hedging here, hedge accounts, right? We have the way we record the debt instruments, equity instruments. So we'll cover everything very minutely when we do financial instruments. Then we have IS 33, EPS, earning per share. So if you guys are investing into stock market, you know that, okay, when we are doing fundamental analysis, we look into the PE ratio and we do also look into the EPS, okay? Theoretically at least. Actually, we don't. But theoretically at least, when we are doing fundamental analysis, EPS is a very good measure. So how do we calculate this EPS? There is diluted EPS. EPS is earning per share. So sometimes number of shares increase, maybe there is a right issue or maybe there is a bonus issue, right? So how do we create a diluted EPS? That's there in IS 33. Then IS 36, impairment. What is impairment? Anyone? What do you mean by impairment? What do we mean by impairment? Do you guys have it in CA? What is impairment? Wow, Girish knows it already. Reduction in value of the asset. Very good. So my value of the asset might reduce, and it does reduce whenever there's an indicator of impairment. So you basically look at whether the value of my asset has decreased. You compare the recoverable amount with the carrying amount and you get to know what is the loss. Now, which statement to which statement that loss goes? Okay, give me one idea. Do you guys have OCI, statement of other comprehensive income, in your Indian accounts? Yes. So there also you were worried about what goes into P&L and what goes into OCI. There's always a fight between these two statements. Some things goes into P&L, some things goes into OCI, and we don't have a clear picture. There's always a confusion, right? So this is what we are going to do in each standard. Whenever we do a standard, we'll keep on taking notes that this goes into P&L and this goes into OCI, right? So OCI is statement of other comprehensive income. So mostly what we say is whatever is realized. Now you might just look at the board. Let me explain you this thing. That there is always a fight between statement of profit and loss and statement of other comprehensive income, right? So this P&L, they say, is usually comprised of realized gains and losses, though this is wrong. And OCI is usually comprised of unrealized gains and losses, right? This is what most of the teachers say, that realized in P&L and unrealized in OCI. But actually, this is not true. Because what do you mean by realize? By realize, you will mean money in cash. So if you say that I had a building and the value of that building raised from the fair value increased from $100 to, let's suppose, $200, a very cheap building. So that fair value increase of 100 is capital appreciation, but actually you didn't sell this building. So many tutors and many students think that when we actually sell a building, that's when we encash the benefit and that's when we record it as P&L item, realized gain. No, you don't define realized and unrealized. We don't define realized and unrealized by encashment. We define them by whether the objective is met or not. Objective is met or not. That's how you define it. So let's talk about IS 16, property, plant and equipment. In that case, if the fair value of the property increases, was your objective capital appreciation? You are using something in the business, a building in your business, an office, maybe a factory. Is your ultimate objective for that property that the fair value increases in the market? That's what you're holding that property for? Tell me, is that your objective? No, not at all. So that means if that value increases, it's an unrealized thing. It's not something related to my objective. It's not related to operations. It's an extra thing, extra happiness. Okay, good. Value increased. But was it my ultimate goal? No. So that's why it goes into OCI, because it is unrealized. So remember, whenever in IS 16, the fair value of the property will increase, the gain will go to OCI because it's unrealized. Whereas you talk about IS 40, investment property. International Accounting Standard 40, investment property. So there what you have is investment property is anything which you hold for capital appreciation. Most of our parents, I would say everyone in India, they have one property, one plot, maybe one full house or a flat, which they bought before their marriage. And now that value has increased of that particular property. So they are always happy about it. That, I bought it. I bought something for, let's suppose, at my time, I bought it for Indian rupees 20 lakhs. And now the value is maybe 80 lakhs, 1 crore. So that's why they bought that property. It's idle. You're not staying in it. You're not doing anything with it. You might have given it on rent. So that's an investment property. So if the fair value of that property changes, then yes, it is a realized thing which will go to statement of profit and loss, right? So here in IFRS is also we have this tiff between the two statements, P&L and OCI, right? That you will do in PPE. Then what we have is, okay, we have covered till impairment. Then you have provisions, IS 37. So when in the beginning said that there is a conflict between conceptual framework and IFRSs. The conceptual framework says you report something when there is a probability to it. So you create an asset when it's probable that economic benefit will inflow. You create a liability when there is a probability that you'll have to pay some money. This is what the standard says. Provisions definition has probability. Contingent liabilities definition has probability. Contingent assets definition has probability. But the conceptual framework, which was revised in 2018, in 2013, we had a conceptual framework which was revised recently in 2018. From there, the definition of asset and liability didn't have the concept of probability. Why? Because probability is subjective, no? Something which is probable for me might not be probable for you. So to all the accountants, this became a very manipulated area. They were like, okay, probability. For me, it's probable, or I'll use it to my advantage. If I want to inflate my profit, I will deflate my expenses or I will reduce my expenses. So suddenly you apply probability and say, okay, provision should not be created, because if provision will be created, an expense will be recorded. P&L debit, provision credit, that's the journal. So if I want to reduce my provisions, what I'll do is, if I want to reduce my provisions, I'll reduce my expenses. That would increase my profit. So I will use this probability concept to my advantage. And to remove this subjectivity, this manipulation, the conceptual framework was revised in 2018, but the standard was not revised. So the bedrock is revised, the rules are not revised. So that is a conflict. There are many conflicts between conceptual framework and standards, but standards always win, right? So in IS 37, probability is there. In conceptual framework, probability is not there. Then you have IS 40, investment property. We just talked about it. What is investment property, right? Then IFRS 1. What if you're adopting IFRS for the first time? So in your respective firms, wherever you're working, if you're applying Indian accounting standards, one fine day they become international and now they're saying we'll start applying IFRS. That also happens to small and medium-sized entities in UK. So I'm working with them. So one of my clients, they were using UK GAAP. And one fine day they said, okay, we are getting, we're getting into a good tire, like what they call in UK is a medium tire. And we'll start applying IFRSs now. They didn't get listed. I don't have a listed client, but they said, okay, I want to go to the mid tire. So being an SME, small company, they were applying UK GAAP, that is UK local standard. But then because now they started applying IFRSs, I applied IFRS 1 to them. First time adoption of IFRS. What are the rules for that? That's IFRS 1. Then IFRS 2, share-based payment. So you guys must have heard about employee stock option plan in your BComs and in your CA. So basically, this is when we pay the employee in the terms of stocks. Maybe we give shares to them or we give share options to them. Whatever is the situation, that is known as share-based payment. So how do I account for the share-based payment? Whether it's a share-based payment, equity settled share-based payment, or cash settled share-based payment. Based on that, we have different rules that is given in IFRS 2. Then IFRS 3, consolidation, business combination. What are the rules of business combination? Just give me one idea. You guys also have 5 working notes while preparing your consolidation accounts? 5 working notes? Is it? Or do you guys do it something other way out? Do you have such thing known as 5 working notes in NDS? Yeah, goodwill we account for. But do you have 5 things? The net assets of the subsidiary, fair value of it, goodwill, NCI, retained earnings. Yeah. So you also have same kind of thing. Right? It's the same thing we are going to follow in IFRS 3 business combination. Now, not just the accounts are important. That means not just calculation is important. Diploma IFRS will test you on theory also. So here you need to know the theory of IFRS as well. You know, I really personally believe that while doing this exam, you are not an accountant, you're actually an auditor. Because mostly in case studies, they would have applied the wrong standard. Or the standard would be identification would be correct, but the rules are incorrectly applied. So as an auditor, first of all, I'll have to pick that up. Okay, this is wrongly applied. Then it's just like rectification of errors. You picked up an error. Now you'll explain why it is an error. Then you'll explain what is the correct treatment. Now you've explained this is the mistake, this is the correct treatment. Now you have to give a rectification journal entry also. So that is how Diploma IFRS works. So if you know IFRS, that's when you will be able to audit the things. So this IFRS exam is more from the perspective of an auditor than from the perspective of an accountant. Okay, let's see the next things. Investment property done, like discuss the introduction. You have agriculture, IS 41. So you have biological assets, for example, sheep, for example, goats, right? So that is a biological asset. They are giving you an agricultural produce. Goat is giving maybe milk, cow is giving milk, sheep is giving wool. So your agricultural produce is a different thing, and that biological asset is a different thing. So how do you account for both these things is given to you in IS 41 agriculture. Then what we have is IFRS 5 non-current assets held for sale and discontinued operation. So some asset, for example, you know, we keep on saying, for example, if you have a car since 5 years. So my dad keep on saying, I'll sell my car, but he has not sold his car till date. So something which we say or we intend or we commit that we are going to sell in the near future. By near future, I mean 12 months. That is kept under the standard IFRS 5. Just always remember that when IFRS 5 will apply, no other standard will apply. So if you have an investment property which is kept under IFRS 5, IS 40 rules doesn't apply. Only IFRS 5 apply. If there is a PP kept as held for sale, IS 16 doesn't apply. Only IFRS 5 will apply. Right? Then you have a new standard that is IFRS 6, exploration for and evaluation of mineral resources. So this thing was not there in our ACCA, SBR or FR. This is an additional thing. So here basically we talk about how do we explore or how do we evaluate our mineral resources. So if you're in Abu Dhabi or if you're in Gulf countries and you have maybe an oil, where you're extracting oil, mines, right? Coal mines. So how do you evaluate those mineral resources? So it's a very rare standard. You'll only apply if you are working in that field. But important for us, IFRS 6, right? Then financial instruments disclosure. First, we discussed IS 32 presentation of financial instruments, like what is debt, what is equity. In IFRS 7, we will see what are the disclosure requirements of IFRS 7, the financial instruments. Then IFRS 8 operating segments. What is operating segment? If I have a business, I'm teaching ACCA students, SBR students, FR students, now Diploma IFRS students, will be soon teaching audit as well. But I have also some work experience. I am doing freelancing for UK SME clients as well. So that is a different operation. So I'm going to see out of my total revenue that I generate through teaching, through my practice, whether this practice is a separate operating segment or not. So how do you know that we should separately disclose it? So if I'm preparing financial statements for TG professionals, I will be including revenue from teaching, revenue from ACCA students, Diploma IFRS students, audit students, and the UK SME clients as well. But that UK SME clients most probably will be a separate performance, or you can say separate operating segment, right? So that is what is given to us in IFRS 8. How do we bifurcate which operating segment, whether to report this segment separately or not, whether to include it within one set of financial statements or not. Then IFRS 10 consolidated financial statements, just an extension of business combination, IFRS 3. Then you have financial instruments, the main standard on financial instruments, like you have Ind AS 109, same as IFRS 9. Then IFRS 11, joint arrangements, joint venture or joint operation, how to deal with it. IFRS 12, disclosure of interests in other entities. So if you have 25% share in other entity, you're an associate, how do you disclose it? If you have a joint venture or a joint operation, how to disclose it? IFRS 13, fair value, very important. We'll cover it. The first standard will be IFRS 13 in my class. It's here in the end, but it will be the first standard. How do you get the fair value? Every time we talk about take fair value, where do we get this fair value from? What are the rules? What are the levels of inputs? That is given to you in IFRS 13, right? So let's see. What else do we have? Okay. Now something really small left. IFRS 15 revenue. Previously, guys, we had IS 18 for revenue, but it was heavily criticized because it was not telling you about complex contracts. This was just telling you about simple transactions. Okay. So then we got IS 18, which talked about complex things as well. We got IFRS 15 as a substitute to IS 18. So you must be thinking, what is this IS and what is this IFRS? Why some things are known as IS, some things are known as IFRS. After a set date, which is around 2012, I don't know the exact one, but around 2012, any new standard that was made was known as IFRS. Before that, any standard which was made is known as IAS. So it's just like the real name and the nickname. Rules are not affected whether the name of the standard is IAS or IFRS, right? All of them are international accounting standards, so that doesn't matter. So in revenue from contracts with customers, we talk about a 5-step approach of how do you record the revenue. Then you have IFRS 16 leases. If you have taken an apartment on rent, you are the lessee. I've taken an apartment on rent, so I'm the lessee, I'm the tenant. How do I account for it? I get a ROU, right of use asset, right to use that apartment. I'll record that asset. Plus, I will also have a lease liability. So I'll record that liability as well, right? If I have given the apartment on rent, I am the lessor. So we have lessee rules, we have lessor rules in IFRS 16. Then we have SMEs, small and medium sized entities. What are the IFRSs for them? They have certain exemptions. Okay, some IFRSs doesn't apply to small clients. So I know this very much in detail because I'm dealing it practically. Then other statements are there, like you have to prepare cash flow, you have to prepare notes to accounts. So these all things are also included, right? So conceptual framework for financial reporting, we did it in the very beginning only. I told you what it is. Handbook of Code of Ethics. So guys, if you talk about ACCA, like in CA also, you must be having some ethics. Like if you're an CA member, you are CA, qualified CA, you have some obligations to the membership body, right? That I have to follow these ethical things. I have to be professionally good behavior. My integrity should be there, objectivity should be there, confidentiality should be there, professional competence and due care should be there. So same in ACC also we have code of ethics. So you will be asked the questions on that as well. So in all the subjects of ACC, in fact, we have one portion of ethics. So that's how they teach students ethical stances. So in diploma and IFRS also we have ethics. So this is all about our syllabus. So if you have any doubts from the syllabus, not how we'll conduct classes and how exam is asked format, just the syllabus, please let me know. And if you are clear, let me know that as well in the chat box. Are we clear on the syllabus? And if there's a doubt, please feel free to ask.
Hello.
Yeah.
Ma'am, are there any differences between the IFRS and the IFRS of SMEs, or there are only just exemptions for the SMEs?
For SMEs, there are exemptions. There's no difference as such. They'll just relieve you. Okay. For example, IS 33 doesn't apply to SMEs, right? And for operating segments, they will have relieved rules. So there's a relief given under SME. For the SMEs, you get a relief, not major change.
Okay, got it.
Clear to everyone? Okay. Let's check out one of the past papers of Diploma IFRS and let's see, like syllabus seems to be okay to us, right? Let's see what is the way they ask questions. So this is ACCA website. You can simply visit past exams diploma in IFRS. We have a CBE exam, okay? So we will be practicing on the platform. I will not just help you with the concepts and everything. I have to make you familiar to this platform as well. So this is what we'll do in classes when we'll solve questions. We'll do it on the platform itself. Okay. So let's see how the exam is framed. Instructions, just do next. Make sure you scroll through the whole slide. Then only you can do next. Yes. Okay. Question number 1. See, the requirement. Using the exhibit 1 and 4, prepare the consolidated statement of profit or loss of Alpha for the year ended 31st December. So full consolidated financial statement P&L, group P&L is required for 25 marks. So the first question is always be going from group accounts. So either they'll ask you to prepare group balance sheet, group P&L, group cash flow is not there in our syllabus, right? So we have to do the question based upon consolidation. So our consolidation should be very strong. Our balance sheet should always match, okay? So this is what is there in the question number 1. So we'll prepare group accounts really good when we'll do our live sessions. So check out the exhibits. They've given you some information in the exhibit part. See, this is the P&L they've given already. You have to use this to make your final group P&L. They've given for individual companies. Then they've given you some information about that company. They have given you more information about it. And then they have given you the option of spreadsheet. So here I'm going to make my statement of profit and loss. So they have given me statements of profit and loss of alpha, beta, gamma separately. I have to prepare a group P&L, right? Using this information in this spreadsheet, right? So this is what is there in our first question. Let's move to the next one. This is 25 marker. Next one is also 25 marks, but see the requirement. Here they're asking you, using information, explain and show how the transactions described should be accounted for in the financial statements. So here the information is not just numerical. My answer is not just number crunching. Here there is a discussion to be provided, that too for 21 marks. So not just talking about, okay, this is added, this is deducted. Here you will state the standard rule. So does IFRS need cramming? No. But yes, it needs that you grasp the keywords. Like in audit also, guys, you can't write simple language, no? You can't say auditor should be good. You use professional words. Auditor should be skeptical. That's the word we use. So basically in IFRS is also, we have to be professional. We have to use professional keywords, right? So develop that habit of writing keywords in each IFRS. When I'll do standards with you, I will make flowcharts. Together with me, always make them or take a screenshot of it, whatever you feel good. Then using information in Exhibit 1, also explain ethical issues. Ethics, as I said, are there in our syllabus. They'll always be asked in question number 2, right? So this is again for 25 marks. Let's see what is next. Construction contract. And then we have joint arrangement. Then we have a 25 marker requirement. So here again, the question is, show how the transactions described should be accounted. No marks will be simply awarded for stating 5-step revenue without proper application. So here it's again about discussion, not just calculating the things. Yes, calculations will be there up to certain extent, but again, discussions. So even if your calculation goes wrong, does that mean the whole question went wrong? No. Only 2-3 marks might be deducted based upon the weightage. Most of the marks are for application. State the standard, apply the standard. State the standard, apply. That's how we pass diploma in IFRS and SBR also, right? So again, let's move to our last question. So this requirement talks about provide answers to queries raised by the director relating to consolidated financial statement. Your queries you need to address appear in Exhibit 1 to 3. You should justify your answer with reference to relevant IFRS. So again, the first question was merely making a financial statement, right? Purely number crunching, no discussion. Here, even if consolidation is there, joint arrangement is there, still they're asking you discussion, right? So here you have disclosures exhibit given to you. Then you have some investment in a new company. So the information about that is given. Together with the information, they have given you 8 marks. For 8 marks, you have to explain what will be its accounting treatment, right? So this is how this question of 25 marks will be solved. So are we okay with this type of exam? Are you all confident that we can do this? I mean, concepts, I am very sure looking at your profiles, you would be very comfortable with it. But the application part and the writing part, typing part, we'll do it. So it's interesting, okay? It's not just mere mugging up of the concepts, it's application. That's what we do as professionals, right? So practice portion is needed. We'll do ample of practice. So let me just get back to my presentation. Okay. So we have discussed the syllabus. Now, how our classes will go. That's what I was supposed to discuss today. So guys, we are less number of people. This is my first diploma IFRS batch that I'm taking in my own capacity, not with any institute. So I will be conducting two live sessions every week, starting from 7th of July. In that week, I'll just take one session, 7th July. I'll give you a proper plan for July. I've already made an Excel out of it. And my timings will be after working hours. I know most of you are working, so we'll keep the timing same, like 8 p.m. We'll decide it mutually. Okay, it's a live session. So I prefer after 8 p.m. time. You can tell me yours. Okay. Saturdays and Sundays, I can give you the morning time. Okay, I don't have availability of evening slot on Saturdays and Sundays. And on some Saturdays and Sundays, I might have my offline sessions. So I might not have the full day free. So 8:30 is okay. So for weekdays, 8:30 is fine. Okay. On weekends, we can do in the mornings. Then I get free around 12th of August. Then my weekends would also get free. Right. So I hope everyone is okay. And anyway, if you miss your live sessions, recordings will be provided. Okay. So don't worry about them. Study material, I'm going to provide you BPP latest study text and kit right after the orientation shared on the WhatsApp group. Assignments, every time I complete one unit, I will keep NCA, non-current assets, where I'll cover IS 16, IS 40, IS 38, intangible assets. 16 is PP, investment property, intangible assets, borrowing cost, government grant, IS 36, impairment. Okay. So all these standards plus IFRS 5, non-current asset held for sale, I'll cover under the section of NCA. We'll start our syllabus with this plus IFRS 13. That's what we will do in the initial classes. So when I cover one unit, I call it as NCA unit. I'll take an assignment. Okay. And by the end, when we'll be covered with the syllabus, like I'll take the syllabus very slow. I don't want to rush it. Because if you just think about the time frame, it's December, right? So if I rush it, I cover everything. Like let's suppose I cover it in September only. I can cover it. I've done in SBR. I can do it. But the point is you can also do it. But if we cover it by September, the thing is we might lose track after September. If I leave you on self-study after September. So it's better we complete the syllabus around mid of October or start of November. Syllabus plus practice. So practice is included in syllabus. I'm not saying first I'll complete the syllabus and then I'll do practice. Side by side, we'll be doing practice. Right? So we will cover everything. Syllabus plus the practice by, let's estimate we'll cover it by mid of October. Okay? Mid of October. It might get extended till November first week, but our target is mid-October. And accordingly, we will go with the speed of the classes. Okay. So fees, INR 20,000, it was 50% off. You guys have already enrolled on it. For others who might join us in future, till 9th of July, this discount will go on. And our first live session will be on 7th of July. So let me just share your timetable for July. You can actually take note of it. In fact, I'll share it on group. This is our timetable. The duration of classes will be 2 to 2.5 hours because we are meeting just 2 days a week. So 2 to 2.5 hours would work. Sometimes like if we are doing IFRS 9, it might take us 3 hours. So based on that, we'll mutually decide. And of course, you'll get 10 to 15 minutes of break within one class. Now just check this out. The first session is on non-current assets. We'll start with it. We'll cover non-current assets in 3 sessions. That means approximately in 9 hours. 7th July, 12th July, and 14th July. 7th July, I'll keep it low key because people might be joining us. 12th and 14th are like together, consecutive, right? Kind of. Then the second is 20th and 21st July. Then 25th and 27th. So in this month of July, we are basically having around 7 classes, right? And then how much syllabus we are covering? Let's go by output, not by input. We are covering non-current asset section. We are covering IFRS 15, 16 and IFRS 9. 25th and 27th, 6 hours dedicated just to the practice. If we go off track by chance, guys, it's a very lenient approach that I'll keep. That's why I started with live sessions. We might keep extra classes based upon mutually if you are available or not available. If, for example, there is a concept which can be explained through recording and I have a recording for it, I'll upload it on the portal. So right now you don't have access to the portal. After your first session, you will get access to the portal where all the recordings will be provided under one website, right? So this is how our classes will go on, and this is for your July month. So by July, we'll be done very major portion of our syllabus. In August, we will start with group accounts. Okay. Then we have September with us, and then we also have October with us. So a lot of time is available. We can easily cover the syllabus by October, right? So is it fine with everyone? Like how we are going to do things? Suraj, Jasleen, Akila, Girish. Any inputs you have, any suggestions? Let me know. Fine with everyone? So that's it about our orientation. I will now stop the recording and then we can interact. Okay. Thank you.